You are watching TheoTrade for August 2nd, 2016, the Theo Night video. I start in an unlikely place this evening, looking actually at the Japanese yen futures. Now, if you'll recall or watch some of these Theo Night videos on a day-to-day basis, I said some signs of volatility were really starting to emerge in markets. All right. Well, we've seen some of those signs emerge today with the S&Ps down about 1275 at about 10 minutes left kind of play in the trading day. Again, that's 10 minutes to the close. S&Ps are a bit off. Volatility is on the move. But that isn't necessarily my concern. And it's not often I do this, but I want to take a step back from just a moment from intraday trade or looking just at today or looking at just setups right here, right now. Okay, so bear with me for just a moment. I'm going to go ahead and close up the left sidebar. Imagine that I'm doing that with just moments to go to the closing bell. But again, I start in a very unlikely place looking at the Japanese yen futures. Now, currencies per se are not something I get heavily involved in because the market, it's incredibly manipulated today by central banks, right? Am I okay to say that? I mean, we all recognize that the central bankers, they come in, okay, they announce monetary policy, and you get thrown all over the place in the currency markets. And in previous years in my trading, I've traded currencies substantially, and that's an understatement. I've been heavily involved in currencies and trading currency futures, but as of late, again, I look at them, but I don't necessarily actively trade because there I really feel I am against and directly against the central bankers. However, inside of the Japanese yen futures, you really kind of need to take note because this may be the marquee signs, not just of volatility in the markets. More appropriately, let's look at the last 3 days of movement inside of the yen to the upside here. Again, don't need to be a market technician. It explodes to the upside. At the exact same time, you have to step back and recognize what Japan did, okay, in these 3 trading days. So last week, of course, when you saw this explosion upward in the yen, last week Japan goes out and they announce more monetary stimulus. Now, they kind of underwhelmed the markets a bit, and they said, well, you know what? We're not going to go out and actually do stimulus. We're just going to buy Japanese ETFs. Now, you're thinking to yourself, how is this going to relate to U.S. markets? Wait for it, wait for it. So they go out and they just say, I'm going to do ETFs. Then last night, again, we saw this explosive rally up today in the yen, some follow through. Last night they turn around and they go, it's on. Okay, I mean, this wasn't like a Bank of Japan meeting. They just come out and the prime minister says it's on. I said, what's on? We're going to do 45 billion, that's US dollars, 45 billion more of stimulus out there, and we got your back, Japan. And the marketplace completely turns its back on Japan. And more importantly, it's one of the first signs. Is the market, and you really got to question this, is the market really turning its back on the central banks? Okay, now why is this so important? As the yen strengthens, okay, this does not help Japan. This is going to hurt Japan. It's going to make their exports that much more expensive. Who wants to buy something at almost a multiple year high inside of the yen? The answer is nobody. It's going to hurt them. But it's one of the first and more definitive signs. Everything they're doing right now, the markets are turning their back towards. However, it wasn't just in the yen. Okay, and it wasn't just in the Japanese markets. If we scroll down to the bottom of the screen, you saw the German DAX get hit by almost 2%. Obviously, the Japanese markets got hit. Markets around the world were discussing stimulus, specifically in Europe, and most of the European banks got hammered, okay, today inside of trade over here. We are going to be watching this in the days to come like a hawk. If this is the period of time when markets truly step back and say, that's it, we don't believe you anymore, central banks, where do we go from there? Okay, we're not just talking about extreme volatility. Things can get chaotic and can get chaotic rather quickly. Again, the central banks, no matter what you might think or might believe, they have the element of control. They don't necessarily control markets out there, and they can throw everything, again, including the kitchen sink, at it and still be fighting ultimately a losing battle. And really some of the groundwork has been laid inside of Japan right now, and you got to wonder, all of a sudden, does Europe wake up and recognize, you know what, we can't support the failing banks right now? And again, that's where traders today have been focused. I mean, most of us have been chatting back and forth throughout the course of the day, and I talked to all kinds of traders from all walks of life, everybody from arbitrage specialists to vol arb guys to high frequency trading, and our attention hasn't been so much on the S&P futures over here, which again have kind of had, Mr. Toad's wild ride today. Not to mention, okay, again, yesterday I saw some couple signs of volatility picking up, but not to mention we're doing 1.8 million contracts on the S&P futures, which if you do compare, all right, so a little bit of volatility is starting to pick up, a little bit of volume out there. It's getting more entertaining. Okay, now where does this leave you? Again, I've been really hammering this theme of why do we want to sell options in an incredibly low implied volatility environment? I'll go ahead and close up the left side bar again, and I'll reiterate that particular point. We've got a 9% volatility. That's only with 1 day remaining. Now, granted, I'm going to freeze the screen momentarily because I think this is such an important point. This is just between today, okay, and Wednesday afternoon close. So here we are on Tuesday afternoon. We just have minutes to go to the cash close. We're only looking at an $11 expected move. Please, right? Inside of today's trade, we've had beyond that expected move. So the options market, I don't think it's getting it right. I think the volatility is getting hammered down. All right, not because of complacency, but because there's so much capital chasing and seeking any kind of return out there. Moreover, the 3-day volatility inside of the SPX, that's 3-day volatility, it's still sitting at about 20. And there's some big reports. Again, there's a jobs report coming out on Friday morning. Even if you don't believe that report matters, once again, maybe it doesn't matter. I think a lot more is going to unfold in the very near term. Okay, between the rest of this week, here we are on Tuesday, next Friday, I think we're really going to get a better feel. Did the market completely turn its back on the central bankers out there? Because again, that's what the professional trading world is reiterating. That's what they're talking about right now. That's got what tuned in, turned on. The other thing we also are looking at is many of us are watching Google, specifically Google, as kind of the test for strength in the marketplace. And in a day that's rather weak, and we're coming here just moments to the close, you can see Google being sold heavily into today's close over here. Watch Google in the days to come. It breaks lower, we all go. Okay, there has been incredible resilience amongst Google, okay, and that underlying is going to need, in terms of market cap, it's going to need to fall for the NASDAQ and the S&Ps to really get rocking here in the days to come. So again, I like to narrow it down once in a while to 1 or 2 stocks. Well, you've got it. The other place, keep your eyes on the financials, because anytime a fire starts to break out in the market, it usually ends up right inside of those financials over there. So again, things to kind of think about in the next couple of days over here, not just about volatility, but the reaction of products like bonds, some of the currencies out there, and I'm going to keep you up to speed as much as I possibly can on those particular products over there, so stay tuned. Now, last but definitely not least, we do have a class coming up. I'm going to be doing a class this Saturday. There's the bell. I'm going to be doing a class this Saturday. Check it out. It's TheoTrade.com/class. get short. That's TheoTrade.com/get short. If you are, of course, a TheoTrade member, you're in the class. It's in our chat room here. If you are not a TheoTrade member, you can, of course, attend this class, and the class is specifically regarding not only getting short, but getting short and selling premium against those short positions. By all means, please do check it out. I mean, what better timing can we have than in a market that is just off of all-time highs? I mean, that's where we are in the S&Ps, all-time highs, right? Premium right now is pretty much all-time lows over there. There couldn't be a better time to discuss, again, getting short, the candidates to get short, the criteria behind how and why I would select a stock, in essence, to be able to get short. And more importantly, we are going to talk about selling premium against those short positions. Again, for those of you that are members, tune in, TheoTrade.com/get short. If you're not a member, check out this address, and we will see you at the class. Thanks, everybody, for joining us here at TheoTrade. Have a great evening. Bye-bye.